Hello, my name is Byron Braun. We'd like to welcome you here today about our discussion about Social Security and retirement. The first step to understanding how Social Security is going to work for you is understanding full retirement age. Full retirement age used to be 65, and currently it is 66 for anyone born between 1943 to 1954. And eventually full retirement age will increase to age 67. So your full retirement age depends upon your year of birth. What does this mean? Full retirement age means the age we have to wait until you draw our Social Security benefits if we want to avoid the reduction for taking Social Security benefits early. Even though most people take their benefits at age 62, there is a penalty for taking benefits at age 62, a permanently reduced Social Security benefit for the rest of our lives. To avoid this permanent deduction, we have to wait until full retirement age to start receiving our Social Security benefits. Now, if we take benefits before full retirement age, the amount of that reduction is based upon the number of months we take the benefits early. There's a little increment of reduction for each month we take the benefits before we reach full retirement age. For example, if someone whose full retirement age is 66, if they take their benefits at the earliest possible time at age 62, that is 48 months early. That person would have a 25% reduction in their monthly Social Security benefit. That's the penalty for taking the benefits 48 months early, a 25% reduction. This means that their first Social Security check would be 75% of their full benefit. The last Social Security check would be 75% of their full benefit. The other meaning for full retirement age has to do with the rule that says we have to retire to get our Social Security benefits. This has always been a tradition with Social Security that if you have to retire to receive Social Security benefits. Here's what Social Security means today when they say you have to retire to get benefits. First of all, once we receive full retirement age, we are retired. It doesn't matter how hard we're working. It doesn't matter how much money we're earning on the job. The month we return full retirement age, we're considered retired, and we can receive all of our Social Security benefits from that month and every month afterwards. However, if you want to receive benefits before we reach full retirement age, there's a limit on our work activity. That limit on our work activity for 2010 is just $14,160 of on-the-job earnings. Now, it's not so important to remember the $14,160 because the limit changes from year to year. But it is important to remember what income counts against that limit. It's really a limit on our work activity. Therefore, the only income that counts against the limit would be our W-2 wages if we're employees, and our net profit from our business if we're self-employed. No other income counts against that limit. For example, interest, dividends, capital gains, rental income, other investment income. None of it will count against the earnings limit. Also, money we take out of our 401k plans, out of our IRAs, or other deferred compensation plans we may have. None of that will count against the earnings limit. Just our W-2 earnings and our net profit from our business if we are self-employed. If you exceed that limit, you lose $1 from your Social Security benefits for every $2 you earn in excess of that $14,160 annual earnings limit. There are two additional benefits I wish to share with you today. These are benefits paid to spouses, ex-spouses, and surviving spouses of people who have paid into the Social Security system. Here's how these benefits work today. When you go to apply for Social Security benefits, if you're married to someone receiving a Social Security benefit, the Social Security Administration is going to figure out your benefit amount in two ways. They're going to pay you the higher of the two benefit amounts. First of all, they'll figure out what you get based upon your own work and earnings, based on your own 35-year work history paying into the Social Security system, but they will also figure out what you could receive if you got a benefit based on half of your spouse's Social Security, and you'll get the higher of those two amounts, of your own benefit or the spousal benefit, whichever one is higher. Benefits for surviving spouses work a little bit differently. First of all, the minimum age to receive a benefit as a widow or widower is lower. You can attain a benefit as a widow or widower at age 60. You don't have to wait until age 62. And then the second benefit for the surviving spouse is not based on half of the husband's or wife's Social Security. It is based on all of the husband's or wife's Social Security. Two important differences between the benefits for a spouse and the benefits for a surviving spouse. All those same benefits are paid to ex-spouses. For example, an ex-wife can still get a benefit as a spouse as long as she was married to her ex-husband for at least 10 years and she currently is not married to someone else. A couple words about the taxation of Social Security benefits. I've covered the earnings limit on someone who wants to draw Social Security, but there's another rule that limits our earned income, the taxation of our Social Security benefits. Most will pay income tax on your Social Security benefits. The only people who can avoid the taxation of their Social Security benefits are the people who have income below $25,000 a year for a single person or below $32,000 a year for a married couple. The definition of income for this law is different from the definition of income that I alluded to. Remember, before we were only addressing earned income when we were considering whether or not you were retired or not and able to receive Social Security benefits. Well, for the taxation of your Social Security benefits, all of your income counts. And to be precise, it is your adjusted gross income, which is the bottom line, or the first page of your Form 1040. The figure you carry over to the second page of your Form 1040, plus any tax-exempt interest you receive from municipal bonds, plus 1/2 your Social Security benefits. Unless your income is below $25,000 for a single or below $32,000 for a couple, by that definition, then some of your Social Security benefits will be taxable. I also want to cover Medicare. Medicare is not going to begin until you turn age 65. The Medicare age, by the way, is not increasing like full retirement age. It's going to be 65 today and tomorrow. But it's also 65 not only for you, it's 65 for your spouse. And unless one of you becomes disabled, it is very important to remember you have health insurance to tide you over until Medicare age of 65. The reason I said if one of you becomes disabled, some people who become disabled can get Medicare before age 65. But except for those exceptions with disability, you have to be 65 for Medicare. Your spouse would have to be 65 to enjoy the health insurance benefits of the Medicare program. At Braun Wealth Management Group, we can assist you with your savings and spending goals in retirement. On our website at braunwealth.com, there are many financial calculators designed to help plan and also reduce some of your fears about living your money in retirement. Thank you for spending your time with me today, and we stand ready to assist you in building and preserving your wealth now and for the future.